Ooh. One, two. Everything is all good. Now let me hydrate first. I like this green screen. However, move it somewhere. Preferably an edge. Let's see what does it show? Nothing. Well, alrighty. Now let's get on to short selling. From where we left off. From which I already skimmed through most of this. I can't get rid of this part. Neither can I zoom. It's on zoom left, right, in one particular angle. So yeah, that sucks. But yeah, at least the camera's on the right side. So is the chat. So everything's a-okay, at least. Yeah, we're already gone with metrics. Yeah, haven't gone through all this. So let me skim through this. Okay, so this is where we left off. Didn't go through here. That's when I finished. Anywho, let's lower the volume. Okay, that should be good. Now, for ideal conditions for short selling, the biggest one is all about timing. Timing is crucial. That's the reason why Robinhood had that issue along with other investor apps, and why every single second the stock market always changes rapidly, so people could time it. Timing it is crucial. But there is other reasons why conditions can be important. There are times when the odds of successful shortening improve, such as the following. During a bear market, the dominant trend for a stock market or sector is down during a bear market, so traders who believe that that trend is your friend have a better chance of making probability short selling trades during an enriched bear market than they would during a strong bull phase. Short sellers revel in environments where the market decline is swift, broad, and deep, like the global bear market of 2008 through 2009, because they stand to make windfall profits during such times. And with that, it can also bring up other conditions to other people, not even people who are not directly contributing to stock trading, but to the economy, because everybody contributes to the economy. It's part of life, and everybody is affected with what people do with the economy. When stock or market fundamentals are deteriorating, deteriorating, deteriorating. Yeah. A stock's fundamentals can deteriorate for any number of reasons: slowing revenue or profit growth, increasing challenges to the business, rising input costs that are putting pressure on margins, and so on. For the broad market, worsening fundamentals could mean a series of weaker data that indicate a possible economic slowdown, adverse geopolitical developments like the threat of war, or bearish technical signals like reaching new highs on decreasing volume, deteriorating market beneath. Experienced short sellers may prefer to wait until the bearish trend is confirmed before putting on short trades, rather than doing so um, anticipation. Doing so in anticipation. Okay, let me read these. All right. Rather than doing so in anticipation of a downward move, this is because of the risk that a stock or market may trend higher for weeks or months in the face of deteriorating fundamentals, as a as is typical the case in the final stages of a bull market. Success when the okay, my bad. Technical indicators confirm the bearish trend, not bullish, but bearish. Short sales may also have a higher probability of success when the bearish trend is confirmed by multiple technical indicators. These indicators could include a breakdown below a key long-term support level of a bearish moving average crossover, like the death cross. An example of a bearish moving average crossover occurs when a stock's 50-day moving average falls below its 200-day moving average. A moving average is merely the average of a stock's price over a set period of time. If the current price breaks the average, either down or up, it can signal a new trend in price. Now let's actually understand what average is, because I'm still confused. Moving average, MA. Oh man, look at all these. Okay. What is a moving average? MA. In statistics, a moving average is the calculation used to analyze data points by creating a series of averages of different subsets of the full data set. In finance, a moving average, MA, is a stock indicator that is commonly used as a technical analysis. Okay, is there key terms? Key takeaways. A moving average is a stock indicator that is commonly used in technical analysis, so it's a general good indicator when it comes to stocks. The reason for calculating the moving average of a stock, is to help smooth out the price data over a specific period of time by creating a constant updated average price. Okay. Let's go with bearish then. Okay, yeah, just going with just a bearish market along with here. So when it comes to short selling, you gotta look at things in a bearish way instead of a bullish way. You gotta favor the bear than the bull. Valuations reach elevated levels amid rampant optimism. Occasionally, valuations? It's not validations. Valuations. Occasionally, valuations for certain sectors or the market as a whole may reach may reach highly elevated levels amid rampant optimism for the long-term prospects of such sectors or the broad economy. Market professionals call this phase of an investment cycle prized for perfection, since investors will invariably invariably inv- invariably 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 invariably. Okay, I'm gonna spend the whole time just practice how to say it. Invariably. Ah, so much with trying to do this article without looking at the pronunciation. But I'll do that for the next word I'm having issues with, because I'm actually able to pronounce this now. Invariably. Be disappointed at some point when their lofty expectations are not met, rather than rushing in on the short side. Experienced short sellers may wait until the market or sector rolls over and commences its downward phase. Alright, this is under validation. Yeah, I'm not gonna go through all this because now we're going to the history and philosophy of it. Okay. John Mayer Keynes, economist. Man, Now let's go with short selling reputation. Sometimes short selling is criticized, and short sellers are viewed as ruthless operators out to destroy companies. However, the reality is that short selling provides liquidity, 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 liquidity. It's liquidity, but it just sounds so wrong. It sounds so wrong. I want to make sure I'm pronouncing it right. Alrighty. Liquidity, meaning enough sellers and buyers to markets, and can help prevent bad stocks from rising. One, hype and over optimism. Evidence of the benefit can be seen in asset bubbles that disrupt the market. Assets that lead to bubbles, such as the mortgage backed security market before the 2008 financial crisis, are frequently difficult or nearly impossible to short. As well, we'll talk about bubbles. Bubble. What is a bubble? A bubble is the economic cycle that is characterized by the rapid speculation of market value, in particular in the price of assets. This flash inflation is followed by a quick decrease in value or a contraction. Contraction. That is sometimes referred to as a crash or bubble burst. Quick pretty much undermines is a it's an understatement. It's like a sharp spike downwards, a drop to the pool in the deep end of a decrease in value. Bubble bursting would mean that everything just falls down, or crashing down. So yeah, they should say sharp, very sharp. But yeah, that is bubbles. Short selling activity is a legitimate source of information about market settlement and demand for a stock. Without this information, investors may be caught off guard by negative fundamental trends or surprising news. Gotcha. Unfortunately, short selling gets a bad name due to the practices employed by unethical speculators. These unscrupulous types have used short selling strategies and their derivatives to artificially deflate prices and conduct bear raids on vulnerable stocks. Most forms of market manipulation like this are legal in the US, but it still happens periodically. So let's go with bear raids. Okay, what is a bear raid? Bear raid is an illegal practice of ganging up to push a stock's price lower through concerted short selling and spread adverse rumors about the target company. A bear raid is sometimes resorted to by unscrupulous short sellers who want to make a quick buck for their short positions. Gotcha. Glad they also put under the spreading of adverse rumors, where, yeah, that can be. That shows the seriousness with defamation on defaming something, because it can actually destroy a trust of reputation depending on their customers' trustworthiness or their knowledge of they know in the situation. Especially things that are quite unethical in their hand, because what is ethic in business can be a big factor in anybody who actually invests in things. There's a reason why investment into some startup companies related to technology, like uh, new food production or alternative energy, is more sought after. And if they receive bad rumors, that startup can just go down, and that is just heartless, because the person doesn't have a heart with trying to compete it in its own current, so as to fight dirty with rumors and such. It's very much ganging up, which you can't simply just say a group of people are a gang. No, let's put pops. preposterous. Yeah, I can't even say that right now. Something's up with my lips. And it's not chapped. So yeah, that's. Let me try to open my. Well, let me talk more out loud. Alrighty. But yeah, you can't classify a gang to anybody that's just a group of people. So, gang mentality is not always the case with just a group of people who just do business. So yeah. A bear market target is generally a company that is going through a challenging period since its vulnerable position makes it easy fodder for short sellers. Yeah, targeting to actual company uh, to go down in order for them to profit. Yeah, you can argue that whatever people that do that, if they do that, they're pretty much ganging up. Yeah. Well, anyhow, let's go with key takeaways. Bear markets are illegal if the short sellers are colluding and spreading false rumors. So it's false rumors. The intent of a bear raid is to force the price down quickly so as to profit from a short position, selling first and buying back at a lower price. So mainly, it's really concerning for bear raids to do this if they're deliberately putting a stock downwards. Bear raids are often used as a scapegoat for stock prices which are falling for a legitimate reason. Short selling is not illegal, but push the price down if short sellers are correct in their concerns about the company or the stock's inflated price. Now that's something new that can come up. But yeah, it does show that scapegoating, a tactic that can be used to defame something, is in play, and that shows the severity towards not just money going in, but the people who are putting in the money and receiving it. It's yeah. Now you're getting to the human element under the economy. Bear raids with short selling or short squeezing. Okay, important. Put options provide great alternatives to short selling. Okay, let me just skim through this silently. Okay, real world example of the short selling surprises. Yeah, I'm not gonna go through here because people are sort of familiar with what occurred. Plus, this one's going with old news, which I don't feel like it's appropriate. And that's pretty much it. I have finished for today. Alright. I'll probably go more into short squeeze to see if I could actually cover it. But first, let me skim through this. Okay. Yeah, skim. I really skim without fast reading everything, so I just sell what just to point out, which is just short selling the first paragraph of the first headline and then the key takeaways. What is short selling? Short selling is an investment or trading strategy that speculates on the decline in a stock on other securities prices in an advanced strategy that should only be undertaken by experienced traders and investors, but anybody who has experience can do that. And people have to look at it in the bearish way instead of bullish way. Remember, there's the bear and there's the bull in economics, in stock trading. Traders may use short-term speculation. It is a hedge against the downward risk. Yada yada yada. Key takeaways: short selling occurs when an investor borrows a security and sells it on the open market, planning to buy it back later for less money. The investor borrows money is not always the case, because as we've seen recently, ordinary people can short sell something without borrowing money. They're paying with their own money. Because we haven't had A time where you have the average Joes actually using this tactic. So, it, the takeaway actually is a bit outdated because borrowing money is not always the case. Everybody has security either from inheriting it or earning it, and they try to earn more money out of their initial security. Short sellers bet on and profit from a drop in the security's price, so it being downward. This can be contrasted with long investors who want the price to go up, because that's usually always the safest thing. So people who short sell are going against the benefits, a bunch of the benefits that economists have been saying when it comes to investing on stocks entirely and initially. The way I could look at it optimistically is that it's a challenging road that not many people look at when putting a bunch of money in. So there could be a lot of risk because there's a lot of reward. And that would make people think that's how the stock market can work. Also, the lighting was a bit weird. I'm actually seeing. Yeah, it's doing right now. Okay, let me get closer. Wow. Okay, let me get my bottle. Is the damn lighting with camera. As you can see, you can even see a green tint that's coming through my camera once I get closer. So it is the voltage, the power, the electricity of the camera that's projecting. And if there's too much light or too much color that's projecting, then it goes a bit haywire. And that is something I guess I just live with. I mean, I've lived with most of the setup like this already. And I'm very happy with it. God, it was a hard amount of time actually just. It was a hard amount of time just troubleshooting on their PC setup, but yeah, I did it. Took around like a few months, but yeah, we able to get everything running. Still refining everything, but everything webcam, mic, keyboard, mouse, um, 3 monitors, lights, etc., GPU, all connected to a laptop. And I feel very, very proud of what I did because I can actually say to many people who don't have it is I have that set up and it's pretty rad. Well, anywho, it's pretty much short selling. Understand short selling. Let's go with here. Wimpy of the famous Popeye comic strip would have been a perfect short seller. The comic character was famous for him saying gladly paying next Tuesday for a hamburger and short selling. The seller opens a position by borrowing shares. Yes. Which really it's a classic. This comic strip is very similar to so many gags of cartoon characters who go invest in the stock market and they do it in a very short matter instead of just letting their money just rest. And that's and they always go with that gag. Think what's ironic and funny is just of many people thinking that's how the economy can work, but that's thing that people frown upon because it's more beneficial for you to have a security measure of where you long-term invest and short-term invest. There's a reason why it's called short selling and short squeeze. So yeah, but it looks like people are now understanding. Hope, hopefully, people who are interested and actually are searching up it are able to actually research take some time to actually research more on their stocks so they can understand that long-term investment is the norm, and shorting stocks is the I would say exception, but not really. As they say, hedge hedge funds are pretty common, and they do that, so it's a common practice. But it's something that the average Joe doesn't have to rely on. They could do it long-term investing, especially if you want to get a stock with dividends and some other perks. But yeah, yep. Now let's go here. To close a short position, a trader buys their shares back on the market. Yeah, it shows how they could recoup their costs. As mentioned earlier, one of the main reasons to engage in short selling is to speculate. Yes, conventional long-term strategy stocks are broad, can be classified as investment or speculation depending on two parameters: the degree of risk undertaken in the trade and the time horizon of the trade. That's the way of investment, really. So it's not just in stocks, but it's just how you do investments in the first place. That's what I believe in. Investing tends to be a lower risk and generally have a long-term horizon that spans years or decades. Speculation is substantial higher risk activity and typically has short-term time horizon. Yep doodle. And yeah, it just talks about the benefits, the disadvantages, loss, gains, using the hedge. I already explained hedging. That's pretty much it. Let's go with the pros and cons again. Pros: possibility of high profits, little initial capital required, leverage investments possible, and hedge against their other holdings, which those two can prove a bit difficult. As you can see, the events nowadays. Now, the cons were potential unlimited losses, margin account necessary, margin interest incurred, and short squeezes. So, margin account necessary, yes, margin interest incurred. Yeah. But potentially unlimited losses is something that does exist. However, you must understand that nothing is unlimited, because with money it can be finite, and being finite will not create overinflation. That's the reason why you don't put in money. You have to have a certain amount of money that's circulating in order for everything to run properly, instead of just have a bunch of money that just lose value because there's so many of it. So potentially unlimited, it's limited, because that's another thing with a bunch of these hedge funds, is that they're losing a lot of money that they're making sure they put in in order to actually gain back, but they can still lose. That's the important thing why they have bailouts, because it's the assumption that that if they can rely on bailouts as an insurance, they pretty much have unlimited money because they don't have to worry about them losing their job, not getting too much money, all that jazz. But it does show nowadays where that might not be the case either, because bailouts can also come from hedge funds themselves, and they're still losing money because, well, in this case, you saw like around like what, 60 billion? No, don't take my word out of it. I'm just thinking about it. Well, yeah, $60 million from hedge funds was already lost, and now they have a limit of what they can put in order to make sure they actually don't put so much, along with also expecting some other things. I don't know, because I don't know much about government bailouts in general, to tell you the truth. But yeah, that's pretty much it. Oh boy, I'm done with this. Now, let's go to short squeeze. I already gone through here, but let me skim through it, see if there's anything potentially I want to put before I leave for the day. Yeah, betting and short squeeze, risks, gotcha. Okay, yeah, that's pretty much it. Alrighty. Betting a squeeze. Contrarian investors may buy stocks with heavy shorts. Yeah, I already gone through here, but I'm still pretty confused. So anyway, I'll just go through all this next time because I'm still gonna talk about stocks more because I feel like in a roll. And with short selling, you will always have short squeezing, so that's part of it. Anywho, that's it for today. So long.